Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day of trading today. And in today's markets, well, we had a little bit of a pullback day. Nothing major, but still a day in which we saw many more names that were red than green in the S&P 500. And of course, that's because there's some apprehension leading into the big day tomorrow, which is going to be the infamous Federal Reserve interest rate cuts. Now, if you take a little bit of a notice here on the S&P, we had low volume, and on the QQQs as well, fairly low volume, just traders, both retail and institutions, hesitating to position any heavier before we get a lot of the decision that comes out tomorrow. Now, I've been saying for the past week or two on the channel that tomorrow's interest rate decision is largely locked in. In terms of the probabilities, you're looking at a 96% of an interest rate cut by about 0.25%, and thereafter the market has priced out 2 additional cuts for the rest of 2025, one in the month of October for another 0.25, and one in the month of December for another 0.25. Now, tomorrow's meeting is not going to be so much about the actual interest rate cut. It is largely going to be depending on the outcome of tomorrow's meeting, rather, on the markets, is going to be largely dependent on the follow-up of the interest rate cut path, right? So tomorrow we get the summary of economic projections, something that the Fed releases once every quarter, in which they go over their expectations for the short, medium, and longer run in terms of inflation expectations, GDP expectations, unemployment rate expectations, but most importantly, the path of the interest rate cuts. Now, as you can see, the market has priced in 3 interest rate cuts for the end of the year and has priced in approximately 4 interest rate cuts for 2026. Now, the market reaction tomorrow is probably going to be centered around whether or not the Fed's dot plot, aka the projections for the interest rate cut path, is currently aligned with what the market believes that the Fed is going to do. Now, obviously, if there's a big discrepancy there, such as if the market has already priced in 3 interest rate cuts for this 2025 year end, but the Fed has largely only priced in or penciled in 2 interest rate cuts, well, of course, the markets are going to have to unprice some of the bullish momentum that we've had, right? Unprice 1 rate cut. That being said, if for 2026 the Fed has penciled in 3 interest rate cuts on the table, but the market has priced in 4, well, once again, you will have to unprice some of that. So a lot of the expectations tomorrow are going to be centered around whether or not the markets are aligned. In terms of the other mandates, right, talking about the unemployment rate and whatnot, and inflation and GDP, I'm not expecting really big divergences from what the Fed thinks is going to happen than what the market is thinking that's going to happen, right? We already got some commentary from Jerome Powell about a month ago when he spoke at Jackson Hole, and they said that largely inflation was done for, but there may be a one-time resurgence because of tariffs. Everybody knows that. In terms of the labor market, the risks now to the labor market are deemed to be more than the risks to the inflation side. However, in terms of the labor market, we're still in somewhat of a no firing, no hiring environment, meaning we're not seeing massive layoffs just yet in the economy, guys, but also the net new job creation and the hiring rate is also not the highest that it's been. So we're kind of in a very tight labor market, and as a result, the Fed seems to want to accommodate financial markets and alleviate some pressure on financial conditions to possibly stimulate the hiring side of things, right? So it's going to be a very curious day tomorrow in the markets. Tomorrow we're going to get a lot of answers, guys, especially because of that summary of economic projections. We're going to get tons of answers in terms of what's the Fed seeing for the labor market, the inflation as well, GDP projections, and obviously the interest rate cut path. So we're going to get a ton of answers tomorrow, which could provide us some very good opportunities to further position in some of our favorite names, or possibly some sectors that started to rally in the last 2-3 weeks, such as interest rate sensitive names, but haven't really fully rallied just yet because they're anticipating the data that's coming out tomorrow, right? So in today's video, we will do a few key things together. Number 1, we'll go over the indexes, do a full rundown down here, where's the rotation across the SPY, the QQQ, and our other major sectors. So we'll do a full index breakdown. Thereafter, we will do the same thing across our big tech name list right here and derive whether or not there's some good opportunities right now prior to interest rate cuts, or in the event that the markets drop after the interest rate decision tomorrow, right? Because that's obviously what's on everybody's mind. people are nervous that it might translate into a drop. If we do drop, I'll give you guys some levels that I'm paying attention to on some of our favorite big tech names right here. Thereafter, at the end of the video, we will take a look at our biggest gainers and losers of the day, of which, as usual, there were many. So we'll take a bit of a 5 to 10 minute segment to do that at the end of the video. And that's going to be it for today, guys. We can't really predict too much in terms of tomorrow's price action. Can have a pretty volatile day. I mean, the QQQ's expected move from now until the end of the week is about 1.2%. Tomorrow, the expected move is about 0.7% in either direction, which could seem a little bit light in relation to just the sheer weight that tomorrow's news event has in terms of impacts on the market, but those are your expected moves. So we'll start trying to, derive some potential levels of interest in the event we start clipping into the lows of the expected move, which obviously is the front and center concern on everybody's minds. So that should be it for today's video, guys. Hopefully you enjoy it. Let's get right into it, shall we? Moving on to the SPY, down about 0.14% today. The Q's 0.08, but as you can see, guys, largely flat, not much action and very low volume. Taking a look at the heat map, one thing is clear though, there were a lot more names that were red than green. A lot of the big tech names did their best to kind of hold up the market today, talking about Apple, Amazon, Tesla, and Meta, Google, Microsoft, NVIDIA, and a lot of semiconductors unfortunately pulling back. Banks, not doing too bad. Banks could be a very interesting trade, not only into tomorrow and thereafter, but also into the rest of 2025 and 2026. We've been talking about them in the most recent few videos. Banks such as JP Morgan seem as though they want to break out to the upside. So we'll take a quick little couple minutes to review some of the banks today. Healthcare sector, once again, very mixed, no breakout there. They're trying, but not quite getting it done just yet. And the bottom half of the market also, anything from consumer defensives to industrials, real estate, and utilities, not doing too much. Even though yields have been progressively moving to the downside, we had some initial action here last week in terms of defensives expansion, real estate and utilities expansion, but that has kind of simply tapered back, probably waiting for tomorrow's data in terms of the path of the interest rate cuts to determine whether or not is this move real, or might we have to possibly wait for more interest rate cuts? Has the market priced in too many too soon, essentially? On the one-day relative, you can see that even better to where the market was really mixed, right? Utilities, basic materials, real estate, technology, and financials to the downside. To the upside, energy, cyclicals, communication services, and healthcare, tiny little bit, but still there. On your 1 week relative, now that the indexes are currently still at their all-time highs, you're sitting pretty good. Technology leading the pack, and to the downside, still defensives and healthcare. There's some good opportunities in defensives and healthcare, and we've been talking about them a lot on the channel in the most recent week or two, since those sectors have been not lagging behind, but just not breaking out with the rest of the pack, right? So that being said, that's your rotation analysis for today. If we take a look at some of the charts, I forgot to say, guys, I mean, retail sales came in today, which was one piece of news. Very strong numbers, month over month, 0.6% versus the 0.2% consensus. That's very, very strong. In the year-over-year comparison, 0.7 versus 0.4. Definitely does not show that the consumer is weak by any metrics. So this also gives us a bit of a hint as to the tone for tomorrow's meeting. Tomorrow's meeting, if you ask me if I had to take a certain side, whether or not the rate cuts are going to be accommodative or reactive. So dovish or hawkish. I'm leaning more towards the dovish side simply because we don't have really bad macro data just yet, right? Inflation, although is a bit higher than a few months ago because of tariffs, is not runaway out of control inflation. The labor market, although very tight, we're also not seeing a skyrocketing in the unemployment rate. And GDP, we just got it a few weeks ago at this point in time, still showed the economy was very strong, 3% to be specific on a year-over-year comparison. However, the forecasts moving into the future for the next few quarters are seeing a tapering back of GDP, but nothing that indicates that we're possibly heading into a recession. And this little retail sales report kind of reiterates the fact that the economy is strong. Consumers are still spending, although not as much as they were prior in 2020 and 2021 with very low interest rates and free stimulus check money, but a lot better than we were seeing in 2023. So that's always good, right? Now moving into the chart analysis real quick, let me just take off the volume so it's not too distracting down here. In terms of the charts, guys, very, very, very simple, right? The bulls remain in full control. We are a bit extended on the SPY, I will admit. Take a look at the RSI right here. We are kind of breaking into overbought conditions, but we know know the SPY is no stranger to that. Take a look at this period from June towards the end of July. And we were in overbought conditions that entire time, and the market simply just grinded higher. So just coming into overbought conditions is not a reason to sell. That being said, the daily bulls are in control right now. If we have any pullback, I'd be expecting a pullback possibly to the 12 EMA, which also lines up with some of our previous highs in the market right there. Knowing the expected move on the Qs right now is roughly, this is the Qs, 1.92%. Expected move is 1.2. So we can go there and touch it, and that would be like, 1.5 times the expected move type of thing. So the bulls are in full control. Any pullbacks, in my opinion, will be for buying opportunities on some of our favorite names. But as I always say on the channel, we'll take it one day at a time. I did things backwards today. Qs first, I guess. Let's move into the SPY right now. So the SPY is the same concept right now. Beautiful expansion with the S&P 500 here. Same concept as I was saying on the Qs. Coming into overbought conditions a little bit, but if you'll notice, we had this whole period for about a month and a week or so in June into July where we did clip into overbought conditions, and yet still the market's kind of grinded higher. So the bulls are working with an absolute ton of space here. Any pullbacks would be very healthy in my humble opinion. And a pullback to the 12 EMA on the SPY right now would be roughly what? Let's call it 1.2%. SPY's done a good job of holding up this 12 EMA, and at the worst case scenario, if you really start coming down hard and we start unpricing some of all this bullishness that we've had in the last 2 weeks, well, the bulls are still in full control here, guys. You got a ton of space on the weekly. Anything above 635 would just be looking for a weekly higher low for possible further trend continuation. So essentially what I'm saying is there's no red flags. The bulls have a lot of space. Company earnings have been very good. The macro data, has been okay, right? I wouldn't say it's booming macro data, but it also isn't recessionary by any metric whatsoever. Moving on to XLF financials right now. Financials just kind of refusing to break out right now, kind of just trapped in this all-time high range of price action on the daily trend. Line in the sand remains 52.82. You break that to the downside. Sadly, you are coming down for a little bit more. We've had some names that had some great rallies, prior, but then in the last few weeks, they've been pulling back. Berkshire is one of them. We had this big sweeping weekly downtrend, nice engulfing move by the bulls, looking to set the higher lows into possible further trend continuation, reacting nicely from 491 down to about 484. Decent little area to be kind of picking some of these lows on Berkshire as they are going for the weekly trend change, looking pretty good there. You got some names lagging behind like Visa as well. Visa probably one of my favorite names in financials right now. 341 down to about 330 is the buy area for me personally for my long-term shares and possibly for some swing trades as well. It's been a nice area of support in line with the 12-monthly EMA for like the past 6-7 months at this point, looking very strong. And then we had names like JP Morgan that I talked about last week when we were down here. Phenomenal buying opportunity, not exactly a touch of support, but very close, right? This was, for all intents and purposes, a nice weekly bull flag. Consolidation at the top end of a move shows the bulls are still strong, pulling back into the 12 EMA and going for the leg of expansion. If you get a pullback on JP Morgan, you might see me playing this one as well, talking about the good old breakout of the highs, possibly retest of the highs down back in the 300 range for some potential continuation. So there's a lot of ideas in financials. Just depends what exactly you're looking for. On to healthcare right now. Healthcare is still not breaking out, but still holding above the infamous 137 line in the sand level where all of your previous higher lows are. So the bulls trying to break out, but not able to get it done quite yet. On the weekly time frame, shows the clearest amount of price action. Consolidation at the top end of this very nice bullish move just proves to me that we're looking for possible continuation to the upside. Eventually, right? If not, we would be right back down here. So the fact that the bulls are looking to protect a lot of the size of this move, consolidate at the tops, get a very tight range going here, might be looking for the breakout and expansion. Healthcare is still looking good, although I do understand that it's a bit of a slow trade. It's a very high probability trade in my opinion, as we're still trading very close to this 50 monthly EMA, something that's only been touched about 4 times in the last 15 years. Moving on to semiconductors right now. Semiconductors, barely green on the SMH. That being said, the bulls are working with a tremendous amount of space too. Beautiful daily uptrend. Any pullbacks looking for a nice higher low. 300 down to about 295 is your most recent area of support. So we might be looking for a backtest into further pushes. And in the event that Jerome Powell's speech tomorrow and the Fed's predictions, well, cause a bit of a market sell-off here and it lasts for more than 1 day, you would still just be looking for a weekly higher low. The line in the sand levels right now are 280 on the weekly. That is just simply because the bulls have protected this weekly uptrend with their lives, very solid price action and further breakout. So you got a lot of space and you also got a lot of support down here. I would not be surprised if this once again represents a very strong buying opportunity. And there's still a few semiconductor names out there that are fairly priced in my opinion. The first two that come to mind is ASML. ASML, any pullbacks, even here, is still a buy in my humble opinion. And a name like AMD that we are going to revisit a bit later in the video, also pulling back from its highs for the last month and a half, still representing some decent value in or around these levels. Now, moving on further, we will take a look at the Russell. The Russell down about 0.45%, not able to break out quite just yet, but the bulls do control the short-term price action. In terms of a nice daily uptrend, you've got to pay attention here to 235.60. So if you're in some long swing trades, short duration swing trades, and you're trading them with a trailing stop loss, well, your trailing stop loss should be right around here, 235.60. You take this guy out, sadly, guys, it's going to be a possible daily downtrend reversal and just very healthy weekly consolidation, which might send you back into the area we just broke out of, 232 down to 226, a very important level. The resistance all-time highs from 2021 also proved to be challenging for the bulls, about 8-9 months ago at this point in time. So the backtest of this area would look very logical for me and could represent a nice little buying opportunity in the event we pull back down there. And the Russell is something that you want to kind of participate into the rate cutting environment. So that being said, that's everything for your index rundown. Hopefully you guys enjoyed that. Few key shout outs here. XLP consumer defensives, guys, nice bottoming out process. So whether you want to play the ETF as a whole or some individual names that might be left behind, not a bad look for some consumer staples names out there. Utilities also. Utilities has just been consolidating, and we know that these usually respond quite well to interest rate cuts. They don't grow that much. They do pay a nice dividend. So whenever you're talking about something that doesn't grow that much but pays a nice dividend, well, you got to compare it against the risk-free yield. And that being said, the risk-free yield right now is very high. So you would like to assume that when the risk-free yield, aka the T-bill, the government bonds, when that yield comes down, well, utilities might just find a temporary short-term bottom and go for another little leg of upswing here. Very clear what's happening on this chart. Just looking for a monthly higher low pullbacks on utilities down into here, 82 to 81. Not bad. And of these utilities names, I'm pretty sure you guys know which ones are the most favorable. Well, of course, it's the ones associated with providing power to data centers. So those types of trades are still some of my favorite utilities trades to be had. Lastly, real estate. You can see that real estate, especially the ETF, has not been breaking out, but there are many different segments to real estate. Of course, there are the home builders, there's the REITs, and so many different things in between. That being said, if you're struggling to pick just one, but you want to maybe play the entire real estate narrative, there's a few things you can do. XLRE is a very broad and diversified real estate segment of the market, very nice ETF, and you could just be looking for the expansion, right? Looking very good with some consolidation, probably just waiting for the interest rate cut path. And then, of course, you have the trade that we identified very early, which are your home builders and home construction ETFs. Shout out to XHB and ITB on any extended pullbacks as a result of tomorrow or something like that, right? Any extended pullbacks, in my opinion, will be very nice re-entry opportunities for these ETFs if you are looking to play the expansion of this trade into 2026. So it's not something for weekly call options or for monthly call options, but a very longer dated swing trade could be on the table right now for those. The VIX right now upticking again today, 4.4%. You can see it's been upswinging here the last 2 days. And so far, there hasn't been any news, but this is literally just apprehension coming into tomorrow's session, essentially. So we'll see what happens, but you guys know the drill, right? If you get a nice little spike on the VIX, that means that the markets are probably going to be red at that point. Whenever you see the VIX flying, well, you know that it's a great time to be selling some options, especially selling put options under the market. So pay attention to that volatility expansion tomorrow. You should have derived so far a little shopping list. If you are someone that likes to run the wheel strategy or sell some puts under the market, build a shopping list and identify some key levels. I'll give you a lot of them on some big tech names a bit later in the video. But now's the time to really be preparing for tomorrow, because that way, when tomorrow happens, if you start to see big red candles, you're not surprised. The first thing you do is you jump to the options chain, you see if the premium is available at the strike that you wanted, because the strikes that you choose are reliant on fundamentals of the company, not necessarily short-term sentiment from a meeting such as tomorrow, right? On to the bonds right now. No sense talking too much about the bonds because they'll move wildly tomorrow. Obviously, what's happened in the most recent 2 weeks is that we've priced in a lot of interest rate cuts. As a result, if tomorrow the Fed's dot plot diverges from this probability tracker right here, well, obviously, if it diverges in a negative fashion, meaning that the market is priced in too many interest rate cuts, you're going to see the 10 and 20 year yields probably rally to where we'll maybe back to this area, 4.25 to 4.2 roughly. Nice weekly downtrend. You'd just be looking for a lower high into lower low. I don't think the market's going to be off by so much. Maybe they're off by one interest rate cut or two, but it won't be a question whereby the market is penciling in 7 interest rate cuts by the end of 2026. And then the Fed is only penciling in 3, right? I don't think it's going to be that big of a divergence. Could they be off by 1 or 2? Maybe. And at that point, you would see a kind of a quick little uptick here on the 10 and 20-year yields. And conversely, you would see a pullback on your TLT bonds, which could possibly be one of the last chances to dance for this one, to possibly accumulate some last positions before we actually move in to some consecutive rate cuts here into the near-term future. Moving on to gold right now. Gold, not too bad of a chart, but pulling back in the post-market for you guys, the after hours. But on the Tuesday session, it was actually pretty good, right? Clipping all the way into 3,700. Appears as though the bulls might be getting a little bit tired up here. I would not be surprised. We've been kind of in overbought conditions on the daily time frame for approximately the past 2.5 weeks. And gold is not really known to be Palantir. Sure, it can breach into overbought conditions. It doesn't usually stay there that long without having some pullbacks. The line in the sand remains at 36.08. If you lose that, sadly, you lose this leg of the daily uptrend, and you might just be going into very healthy weekly consolidation. And that would be something that I can get behind, a bit of a weekly pullback, maybe into the 12 EMA. 12 EMA on the weekly chart has been an infamous level to kind of play some longs on the back tests. So I'll be looking out for that. Call it about, under 35 to about 34.50. I know as we stand right now at 37, it doesn't seem probable to you, but keep in mind, it won't only happen tomorrow. It'll be a few consecutive weeks of downside. That'll be the next area that I'll be looking to play some swing trades on gold personally, right? If we take a look at Bitcoin right now and ETH, well, Bitcoin's not moving too poorly at all. The Tuesday candle showed a nice 1.26% appreciation day, and as a whole, we are still in the context of this nice daily uptrend. We're challenging resistance right now, 117 up to about 120, and we will see what happens tomorrow. Obviously, Bitcoin is a risk on play, so if the Fed confirms all the interest rates that the market is priced in already, the interest rate cuts that is, well, then Bitcoin's probably going to have a good time. If we have to reprice, well, then Bitcoin is probably going to fall a little bit. That being said, pay attention to this level right here, 114,500. Lose that without many new highs. It's a daily downtrend. That is the top of your weekly move, and the bulls have put in a very nice retracement size right now. If you take a look at the fibs, in terms of the size of this upswing, it's like an over 50% retracement, right? Not quite a 618, but not too bad. So the bulls have created a decent amount of space. It was a weekly downtrend. We look at the space that was created because we want to ascertain if we have a downswing, how likely is it for the bulls to turn this into a possible new likely uptrend? And as a result, the percentage right now is about 50% odds. So it's a coin toss, but I do still have a bullish leaning bias on this one. Why? Well, quite simply because of the monthly timeframes, right? The monthly timeframes hold the key in my opinion. Any move lower would once again just be looking for a monthly higher low. So keep that in mind. If tomorrow kind of triggers a cascade effect of some sell-offs for maybe something longer than 1 day, call it a few days up to a week or two possibly. Well, if you make your way back down into here 107 down to about 99, 100, I'll definitely be buying the heck out of this dip, out of that nice support area that the bulls have used so many times in the past. On to Ethereum right now. Ethereum on the Tuesday session, kind of pulling back. So since the Friday session, it's been kind of nothing but down. But here we had kind of a tightening range, right? Daily downtrend got really tight. We got the breakout candle right now, looking for the higher low, trying maybe to go for it, but obviously very tough to predict that into tomorrow's price action. If it's a good day for the markets, ETH is probably going to fly, and we're probably going to crack 4,700 and just go for momentum continuation and just go possibly for weekly uptrend continuation as well, right? However, if it's a bad day for the markets and it leads to several days of red, you would not be surprised to see a weekly downtrend in effect with a breakdown below here of 42.33. And if that is the case, guys, the clearest time frame on Ethereum as well is going to be the monthly time frame, just looking for a monthly higher low right down here into this 4,000 to 3,700 pocket. So, I mean, very nice area to be accumulating some stuff. Ethereum has a lot of volatility. I've been playing it through the intermediary of BMNR. Any red days, I'm kind of just selling put options below. I have a few shares in one of my tax advantaged accounts. Not too many though, nothing crazy in terms of position size, right? That I was buying kind of like down here. But if we, in the regular trading account that I show you guys, any little red day here, I'm kind of looking to sell puts in the mid 40s. I would not mind being assigned down there on BMNR, but you guys are free to use the Ethereum proxy that you want, whether it's ETHE, ETHA, ETHM, SBET, anything you guys want. Just make sure you're using the Ethereum chart as kind of your proxy, right? Because they all move with the price of ETH at the end of the day. That's everything for our overall market rundown. Hopefully you guys enjoyed that. Now, let's dive into some of our big tech names. So moving into Apple real quick, Apple right here at 0.61% on the day. Not a bad day for Apple, but they were up like 1.5 at one point today, and they kind of gave most of it back. So we're still struggling right here with the 240 psychological area of support. And the bulls are trying to protect this daily uptrend swing right now. If we get trapped in some form of an accumulation range up here, I would not be surprised. Well, as a matter of fact, we have been in some form of a slightly awkward range now for the past 5-6 weeks at this point in time. Not too bad. The way that I'm playing Apple right now personally is I'm not really going for the breakout swing trade on them. I had some swing trades at the lows and we closed them right around the 240 mark a few weeks ago at this point in time. I'm happy. That was my take profit on that big Apple swing trade. Right now, though, what I'd be looking for is any pullbacks. Probably going to be looking to sell some put options in around the lower 220s. So as I said with the other charts, if tomorrow starts a cascading effect and I can find some Apple short puts for the next few weeks down here in the lower 220s, I definitely will be nibbling on those as well. You'd just be looking for a monthly higher low for possible further trend continuation down the line into Q3 and into Q4 as well. The pre-sale order numbers for the iPhone 17 are looking pretty decent right now, guys. So I would not be surprised if Apple's bullish quarterly revenues that they posted just about a month and a half ago at this point, I would not be surprised if those do continue into Q3 and Q4. Might be looking a lot better than the most recent few years. Or most recent few quarters, excuse me. Moving on to AMD right now. AMD down about 0.43%, a very choppy price action. Obviously, what's trying to transpire right here is we're trying to go for the daily uptrend break into resistance, which is 170 to 157. And that's important, right? Because we want to ascertain whether or not these are the weekly higher lows, yeah? So it's a nice weekly higher low session right now, trying to be set. Very nice weekly uptrend, looking for the weekly higher lows. And if we can get back to daily uptrend, that'll kind of be a convincing thing to show you that, yeah, the weekly higher lows are set and we might just be looking for continuation back into the next area of resistance, 178 up to about 186. However, if tomorrow's a red day and we want to go shopping for some AMD, I still think that the low 150s into 140s is a phenomenal area to go shopping for some shares for this stock for a longer term portfolio, as the valuation does support some pretty good expansion over the next couple of years. That being said, if AMD drops a lot tomorrow at the end of the day or into the Thursday session, for the next 1 or 2 weeks, I will be looking for AMD short puts as low as I can get in the 140 range, the lower area of support down here, 148 down to about 133. I would really love to sell as many puts as possible in this pocket. I did a nice job of selling them when we were coming down in the most recent few weeks. And I would not hesitate to write more if we come down there again. Moving on to Amazon right now. Amazon up 1.13% today. Very strong day, but once again, kind of tapered back towards the end of the day. It's fine though, the bulls are still in control. Your line in the sand level remains right here. 226.46 is your daily higher low. So in the event that it's bad tomorrow and we take this out, daily downtrend and just going right back into very a very awkward range of consolidation here. I say awkward because it is a weekly uptrend, but it's kind of a very awkward weekly uptrend, right? It's not really getting much momentum follow through. Every time they try to break out of 233, 234, something happens to where we just get pulled back into this range like a magnet. 227 down to about 218. In the event Amazon pulls back tomorrow into the next few days, into the next week, and I can find some short put opportunities with some higher volatility down here, 220 or less, I'm a big fan of that on Amazon. And also, I will not hesitate to add some more long-term shares to the company down here, as the valuation is pretty good, and Amazon is still one of my favorite names leading into the next few years, just because all of their lines of business are firing on all cylinders. Moving on to Google right now. Google down about 0.14%, but still staying very close to the highs right here. Now, that being said, obviously Google is very extended. We are currently at an RSI of 87, which we have been at ever since the DOJ news day. So what, almost the past 2 weeks in a row? That being said, all good things come to an end eventually. We're just waiting to see when that's going to transpire on Google, essentially, right? If you want to know for sure when that's actually happening, just take a look at your 4-hour time frame. As soon as you lose the sequence of higher highs and higher lows, and you start to get the 4-hour downtrend right there and a loss of the 12 EMA, well, you guys know obviously that we're heading into daily consolidation. But everything is going to be a healthy pullback at this point on Google, on the daily and on the weekly timeframes as well. The bulls are working with an absolute ton of space. We will see what happens. In my opinion, when Google does go for a pullback, it'll probably be a few weeks worth of consolidation, which is something that we saw similarly, on Microsoft stock after it finished its monstrous rally, on Netflix stock after it finished its monstrous rally. But nothing is wrong with the companies, right? It's just eventually you do need to consolidate. The weekly RSI is at 80. At 250, is Google still a buy? It's a nibble, but it's a nibble with the context of you got to keep nibbling on the way down. I'm still very bullish for Google into 2026 and 2027. My price target for Google at the end of 2026 is over $300. So there is some appreciation to be had over the medium term. Long-term shares thesis, I think, is very clear. Companies firing on full cylinders, and the longer-term valuation is also quite manageable still. Moving on to Meta right now. Meta actually having a great day. 1.87% to the upside, 779. Finally getting the daily uptrend. We've been talking about this for the last 2 weeks, right? Daily downtrend, engulfing move. Would the bulls convert? A matter of fact, they did, and which is exactly why I was kind of trying to take a swing trade on Meta right here. And now finally the swing trade has been paying off. Might be looking to close that tomorrow, as now it did hit my take profit targets, roughly coming into the 780, 790 all-time high region. Looking very good, right? So building the swing trades from here, going for the daily uptrend shift with a weekly uptrending bias. This is what gives you the clarity in terms of who is in control and why you might be wanting to play those patterns, right? So looking very good. The next upside target, 796. But of course, if you come back down after Powell, you might just be testing the, again, 740 to 730 region, 12 EMA on the weekly, and this yellow line, which is your previous resistance highs, will be current support again. Moving on to Microsoft right now. Microsoft down 1.23, but something has changed in the most recent few days, and you can clearly tell on this chart. Daily downtrend, engulfing move by the bulls. They're trying for it now. We'll see if it actually manifests and happens, right? But now looking for a daily higher low to get a trend change going on the daily, which in turn would signal that your weekly lows are set, and you might just be looking for another leg of weekly upside on Microsoft. So we will see what happens with it. Tomorrow's data is going to be, huge for Microsoft, of course. Although it doesn't affect Microsoft directly, I mean, let's be honest, right? If the markets are red, Microsoft's probably not going to be green. So that being said, line in the sand remains down here at about 492. I'm not playing Microsoft for any swing trades right now. I'm also not buying any shares. Microsoft for me right now is just a hold. Moving on to Netflix. Netflix down about 0.15%. The bulls are still trying to hold on for dear life down here. 12.15 to about 11.84, right? The line in the sand is arguably 1184. We've been holding it for a better portion of the last month and a half. If you lose it, sadly, the daily downtrend continues at that point. And also, sadly, you're also losing your weekly breakout momentum here. Just going to flush back down towards the lows into the next line of defense down here, 1160 down to 1111, which consequentially would be my area that I'm looking to possibly pick up a few more Netflix shares. Well, fractional shares. I won't buy full shares because I have a pretty big Netflix position already, but just nibbling. I DCA the markets with my paychecks every month. That being said, the key buy area for me, guys, is like low 1100s. 1100 down to 1000, this little pocket right here, testing the 12 EMAs on the monthly pullbacks. Decent little pocket. The valuation gets a bit more manageable. It's not bad at $1,200. The market cap is about 510 billion, and management's guidance for 2030 is to have a $1 trillion market cap. So that's about a 2x over the next 5 years. Not too bad in terms of a compound annual growth rate. Well, as a matter of fact, it's more like 4 years, 4.5 years now. Moving on to NVIDIA right now, 1.61% to the downside. This one kind of came undone into the the second half of the day here around noontime. Then it just kind of eroded. It tried to hold some of these lows in the morning, just kind of came undone. But I mean, the price action on NVIDIA right now is fairly clear in my opinion. Daily downtrend, nice upswing by the bulls. That's a 78% retracement size. Gives them a lot of space set up for the higher lows and go for the trend change, kind of like what we just saw on Meta, right? Except for it's not a fully engulfing move, which gives you the best chances, cup and handle, etc., so depending what you want to call it. That being said, NVIDIA not looking too bad. We got one fallback area down here, 171 to 165. In the event, because everybody's worried about the downside risks, right? In the event that you do come to the downside, what are you looking for? You're just looking for furtherance of maybe a new weekly downtrend, and as a result, just very healthy monthly consolidation. One thing's for sure, if NVIDIA comes back down here again into the mid to low 160s, I will be exploring the possibility of selling some puts in the mid 150s because I want to be playing this monthly pullback into this very key area of support, which is like low 150s. I would not mind playing the midpoint though, like 157, 155 into this area right here, because at the same time, the 12 EMA is going to be curling up. So if NVIDIA chooses to pull back a bit more, I'll be a big fan of selling some put options down there. On to Tesla. Tesla's breakout continues, not breaching the high of the day yesterday, but still a strong day of performance, 2.82% to the upside. Clear breakout, clear bull price action control right now. Beautiful daily uptrend break, and we really smashed through this area of resistance, 405 down to about 381. I'm not going to close this box green just yet because we have not closed the weekly candle, but the price action is pretty clear, right? Broke out at two levels at one single time. 360 to 340, and now the infamous 400, 405-ish down to 380. In the event that we get a back test here, which it did do, I would agree. I'm waiting for interest rate cuts though, because it'll probably move Tesla. The commentary tomorrow and the pricing in, pricing out of the interest rate cut path, it will probably move Tesla a lot. So that being said, if you see a pullback into the shallow ends of 383, selling put options on Tesla down here, not the worst proposition, just be very careful, but also possibly starting some swing trade longs into the 380 area of a pullback, consolidation right here for the next leg, not too bad. I'll take you guys through it one day at a time. I'm just gonna kind of let the price action play out tomorrow. And if it just blasts off tomorrow and we miss it, there is no actual pullback, no problem at all, guys. There's tons of other plays in the market. Moving on to Palantir. Palantir, 0.55% to the downside. No notable price action. I mean, we have the daily uptrend breakout right now. Essentially, if you get any red, you're just going to be looking for a pullback into resistance highs here of this little range, 162, 163. Just looking for a breakout, retest, and possibly run on Palantir. If the markets get really bad and you kind of unwind everything, you're just going to go right back into this range of consolidation, right? So the bulls right now, they're trying their best for some weekly uptrend continuation. However, if you pull back, got a nice fallback area down here, 148 down to about 139 support. If you pull back hard into these lows, I might be looking to sell some puts on Palantir, 130 to 120. When the VIX expands, when the markets go bright red, when Palantir goes down 4, 5, 6% in a single day, and you get the volatility expansion on the chain, you can find some premiums down here. I found them a couple times, as a matter of fact, in a lot of these candles. We were not even very close to 130 to 120 at all. And I was finding some mid 120 strikes for the wheel. So you can play it with some good distance. Moving on to SOFI right now. SOFI, relatively strong day. At one point, SOFI was down 3.2%, but the bulls were able to buy that dip. SOFI is obviously going to be a name that is going to be affected by tomorrow because it's an interest rate sensitive stock. Let's be quite honest. That being said, it's a very solid company right now. Daily bulls are in full control, and any pullbacks looking for a daily higher low. The weekly timeframes provide the most amount of clarity, in my humble opinion. Beautiful weekly uptrend by the bulls right here. A little bit of a back test into our whole 24 to 22 area of support, this green box, which is the prior highs from 2021. It's going to be challenging for the bears to break through that, but in the event that tomorrow starts a few days worth of selling price action on the stock, I'm a big fan of selling some put options into this range, and that would also be the next little area that I would be considering more swing trade longs on SOFI as a whole. In around 25, which would be that area, stock trades at a very fair 9 forward price to sales and a also very fair 1.61 peg. So it's not as expensive as other names such as Robinhood or Palantir or some of the other fan favorites, right? Still a lot of appreciation on the table for SOFI into the next 12, 18 months, in my opinion. Moving on to Uber right now, almost done. So Uber down about 1%. Not too much to say though, right? Started off, tried to crack $100, couldn't get it done. Now pulling back. Daily uptrend is very nice right now on Uber. You might just be looking for a pullback into this whole 96 area, this yellow line, which is the breakout zone. So infamous breakout retest. The bulls are going for one more leg of weekly push to the upside. However, if we get rejected because of tomorrow's price action, it just brings down all the tech stocks. Down here is the backtest location, right? 93 down to 90. Yes, there's a small one here, but the bigger one, of course, is this support box, 93 down to about $90. So keep that in mind. If you do come down to $90, I mean, it's a nibble for me on Uber. I'll be quite honest. At $90, the valuation is still very manageable. Not as good as it was, of course, back in the $75 to $60 range, where most of us were accumulating some shares, but very strong metrics. We covered their earnings. I liked Uber's metrics, guys. There was nothing bad. Look at the mobility and deliveries metrics. Very strong, continuing to expand their monthly active users, 180 million people using Uber. Can you guys imagine? That's a lot of customers, right? And a whole bunch of buybacks remaining, which is 10.75% of the entire float. For the next year and a half, 2 years. Now, lastly, moving on to TSM. TSM, strong day, strong day. I mean, they started to break out towards 266. Sadly, got rejected a little bit. So your daily higher lows, I mean, you can make an argument that they're there, but in all reality, they are all the way down here, right? These are just inside candles. Inside last Wednesday's trading, there is no higher lows because we did never shift. We never shifted the hourly trend back to the bears, right? So that being said, and if you're looking for a pullback on TSM, there is one very likely area that should kind of just jump out to you. And of course, that's the breakout zone. Talking about this guy right down here, 247 down to 240. Let me just put a green box here instead of a red one so you guys understand it's no longer resistance. That is going to be the key fallback area for the bulls if we do retest that, and would just be a very beautiful weekly breakout retest, right? Very strong area. If TSM comes down here, 247 to 240, you might see me playing it with some short-term swing trades. But if we do come down here, all the way into there on some good volatility, you might also find me selling some put options, 230 down to about 220, farming the heck out of this stock, because at 230, where I would be farming, the valuation is very manageable, a low to mid 20s forward multiple, and a very cheap PEG ratio as well. That being said, that's everything I had for you guys for today's market recap. Hopefully you enjoyed. Now let's spend a couple minutes here doing the biggest gainers and losers of the day. Now, we spent a lot of time on this section over the course of the past week or two, so you guys probably know my stance on the fundamentals of these companies. So today, just to save a bit of time, just because tomorrow, the price action is going to be wild tomorrow, right? So a lot of these names move a ton. So that being said, any levels that I give you guys today, short-term levels, such as like daily levels, they might just get broken tomorrow. So I'd rather focus on large weekly levels to play. So that being said, Rocket Lab, company's good, I'll give them that, right? But they are very expensive right now. The cleanest time frame on Rocket Lab, in my opinion, is the monthly. If tomorrow starts a cascading effect to where some of the growth names really come undone, mid-30s on Rocket Lab to sell some short puts, I'm not opposed to. That would really be the area, rather than kind of counting on these lows, which you can do, right? But tomorrow is going to have a cascading effect. If the markets just moon, no problem at all. We missed it. But if the markets really come down and we're patient, where I really want this one, if I'm willing to play with some short puts, is mid-30s. And the stock has such good volatility, you don't need to come down there to play them, right? Just give me another like 6-7% day tomorrow. Maybe you can find some mid-30s short puts for the following week in the event that you wanted to play it down there. HIMS, same concept. Super volatile stock, trying their best to hold on to support here. 52.50 down to about 48.56. Daily uptrend, yes, as we were talking about the most recent few days, but still, it's a little bit of a spicy chart. You're not too sure if the bulls can hold on to this largely dependent on tomorrow's price action. In the event that HIMS comes back down into the low 40s, again, I'll be playing some short puts under the $40 range. That is the only type of swing trade, or rather only type of trade that I'm looking to do on HIMS right now. The only other position I have on HIMS is some long-term shares, looking for the expansion of the business into a 20, 25, $30 billion market cap company, but that's not going to happen overnight. My timeline for that for the shares is like some point late 2026 into 2027 perhaps, where they really start getting the expansion of that customer base. I mean, Open Door, big name for tomorrow, right? Interest rate sensitive. If Open Door has a big red day, you guys know the drill. Selling puts to get in some shares to play possibly the next leg of a rally. Not too bad. This one will have thematic tailwinds probably for the next 6 to 9 months. So keep that in mind. I'm a big fan of reloading some longs, but only on some big pullbacks. So be patient for them. If they come to you, no problem at all. I'd be looking for like 7 to 6 on any significant weakness, just looking for some weekly higher lows, maybe to play the next leg higher. So selling some put options or maybe buying some out of the money, very long dated call options will be the only way that I'm looking to play this one. SMR, if you get the prophecy fulfilled part 2, because they did fulfill the prophecy, the head and shoulders prophecy, of course, with this little downswing right here. If you do it again and come down again, I'll be looking to play SMR short puts around $30. I've had some good success doing that a few weeks ago. So if it happens again, I might be doing that. The clearest time frame for me, guys, the monthly chart, right? Just looking for some monthly higher lows on SMR. AAPL is a bit too high for me, so I might just be playing SMR instead. And down here in the, mid to high 20s is not a bad location. Anything under 30 will be good for me. Oscar Health sadly refusing to break out, still trapped in this 2-year range, or rather 1-year range of accumulation, 1.5 year. It'll be 2 years in February. That being said, if Oscar Health pulls back towards the lows, I'll be doing what I always do, which is selling some put options towards the $16, $15, $14 range, and also accumulating either some more shares or some more leap call options for this name. I like this name a lot, but we know healthcare has been very slow. That's how I'm looking to play it myself personally. Bros and Cheesecake Factory, we're not going to spend too much time on. Cheesecake Factory is a nice pullback trade, 52 down to 44 if you're looking to trade the wheel on it. I mean, very clear monthly uptrend here on the Cheesecake Factory, and very consistent area of prior price action. So selling some puts down here, I mean, you got to like the company, let's be honest, right? Moving on to Bros. Bros for me would be a short put opportunity down here, like 52 down to like 45. I'm not saying it's going to go there. I'm just saying that's where I want to play it. Maybe you guys want to play it higher, and that's your prerogative. Where I want to play it personally would be a monthly pullback down to this range right here, where the valuation gets a bit more manageable. So that's the location I'll be looking for over the next few days, weeks. Cloudflare, can't touch it up here. Look at the monthly chart. What do you want me to do with this, right? I mean, long-term shares are a hold up here, but honestly, what do you want me to do with the wheel up here? You really can't do much, right? You can keep playing the daily legs higher with like some small call debit spreads or things like that, but I can't really do leaps on it because it's not really fairly priced right now, clearly not fairly priced. And I also can't really play the wheel because there's no really big areas of support to fall back into. This chart is just very extended, so nothing for me to do, but holding long-term shares, not a bad proposition, right? If you take a look at Iris Energy, kind of the same concept. Now, I mean, after earnings, we covered it at 26. I was saying like, yeah, it's a buy here and a buy through a bit of a dip. But sadly, now it's all the way at 36. So congratulations to all the bulls. But for everybody else looking to position, this is when the valuation starts to get a little bit rich. I understand it can run more, and that's why this stock for me is a hold. It might be a small nibble up here, but if tomorrow's event cascades us to the downside and we move our way back into the low 30s, stock has good volatility, good implied volatility on the options chain. Selling some put options under 30, 26, 27, 25, maybe not the worst opportunity for some pullbacks. I'm not saying it's going back there. I'm just saying if I get like a 5, 6, 7% day of sell-off, I can probably find some opportunities to sell some puts down there. And that way, I don't care if it comes down there or not. If it does, perfect. I get the shares where I actually want them. If it doesn't come back down there, perfect. I just get to play the volatility and pocket the premium. I think that's pretty much it for a lot of our names. Same concept with NVIS, right? NVIS, I have won 75 short put strike for this week, and we made some good money on it. If it keeps dropping after tomorrow, I'll be doing those again. This is the backtest location, right? Lower 70s. So I know it ran an absolute ton, after the Microsoft deal, and now it's been consolidating. So now's the opportunity to be just DCAing into a few shares or just playing the wheel a little bit. You know, this stock as well for me is the hold and or a small nibble. It's not a full send at these prices, but what it is a very nice short put entry opportunity down there on some volatility. Sentinel 1 as well. Sentinel 1, you guys know me, I'm playing short puts down here, 17, 16, and accumulating some leap call contracts. I think this one is a great target for a acquisition by maybe one of the larger players, and the base and the bull case scenarios make a lot of sense for this company. I know the price action has been very soft and very weak, but I'm a big fan of buying this accumulation zone all the way down here. Resolve has been a stock making its way across social media right now. It was the chart that I showed in the thumbnail of yesterday's video. That being said, a name like Resolve, I'd be interested down here, like $6 to $5 on a pullback. Give me some good volatility candles here. Nice pullbacks like we see on Open Door out of overbought conditions. Have people take profit. And I might just be looking to play it down here $6 to like $5, either with some short puts to enter with some shares, or maybe even some lead call options. Just take a bit of a lottery bet on the company. Stock is pretty much AI agents that do a lot of shopping for you, right? Which has been kind of a theme that we've seen recently. And now, I mean, if we move to the upside, was that everything? I don't think I missed any of them. No, I think that was everything here. Moving on to the upside names right here. Let me just check the time of the video. Okay, we're making good time today. Some of the China names, guys, fly. Absolutely flying right now, but still early in my opinion. Baidu, relatively still early, although not as early as you once were. JD.com, still a bit early. Baba, let's be honest at this point, guys, Baba is kind of gone. You can make an argument that sure, like the fundamentals are still relatively cheap, but let's be honest, guys. I mean, the real time to buy Baba was when I was kind of hinting at that all the way back here in 2024, and even this entire period of consolidation earlier on in the year. That was the time to buy Baba. That was the time that I bought all my K-Web leaps as well. And now we're kind of running into an initial take profit area, which is 45 on K-Web, which is the China ETF. But China names looking very strong. They're kind of holds for me at this point. Some are still buys, but not all. Moving on to BMNR, I mean, same thing that I was saying about ETH, right? I'm just looking to sell puts. Sell puts on the volatility and maybe just accumulate a few more shares. I mean, at the end of the day, Tom Lee is not done acquiring, you know, some Ethereum, right? He wants to hold 5% of the entire supply. So at current prices, you just go on coinmarketcap.com and you can derive the price, the market cap of ETH and how much Tom Lee actually wants to own, right? So there's some clear upside on this one. And as a result, a lot of these treasuries, whether it's Bitcoin treasuries or Ethereum treasuries, okay, guys, they're all structured the same, right? Nobody's reinventing the wheel here. The only difference amongst them is their ability to raise capital. The reason that I prefer BMNR more than others is because Tom Lee and his other team of super investors, their ability to raise capital is better than any and all other companies who are doing it. That's why I go with BMNR, right? If you want to see some big market cap expansion, there's two ways to do it. Either Ethereum has to go up, or they have to buy more Ethereum and have more in the fund. Obviously, they will all go up if Ethereum goes up. However, the company that is able to acquire the most amount of Ethereum will stand to have the highest market cap at the end of the day, which is why I go with BMNR. Their ability to raise capital is just the best. That being said, there's a lot of attention around Rivian, guys. I mean, Rivian has always been a lotto play for me. You guys can clearly tell what's happening here. It's been doing nothing for like 2-3 years at this point in time. But it is a very nice area, right? Rivian, it's an X factor play. EVs have been dead since 2021. That being said, Rivian, at least they have the partnership with Volkswagen, right? Not a bad company. I actually like their products a lot. That being said, if you wanted to position something small, right? Leap call options, slightly out of the money for as long as you can go on the chain, and or some shares and just sit on them and see what happens. Not the worst proposition in the world. Restoration Hardware and some other ones, not really noteworthy to talk about because they will move a lot on interest rates tomorrow. But this one is a theme, right? Clear theme here. If the path of interest rates are confirmed, Restoration Hardware has a good chance to recover over the next 6, 12, 18 months type of thing. A lot of their furniture is expensive and does require a lot of financing, which is why the company's been dead for the past 2-3 years, but could be coming back soon. And that being said, guys, you know, that's kind of pretty much everything. Sure, there's other names here, and we went over so many more yesterday. Mercado Libre for me is a screaming buy, by the way, right here. Just figured I should throw that out there, as I have been throwing it out there almost every single week. for like the past 2 months at this point. Incredible company, very strong valuation too down here. You're not paying a lot for this company at all, like really at all. For the amount of, EPS and revenue growth that they're going to be having, very strong. One of my favorite bets in the market right now that nobody seems to talk about. Phenomenal EPS expansion in the next 4 years. They're really hitting like peak growth curve right now, and revenue as well. Phenomenal revenue expansion by the business. Phenomenal, and it's been consolidating for like the past 3 months in this range, which is great. When a business consolidates, but the fundamentals keep improving, that's when you really want to accumulate, because eventually the breakouts are going to be big and violent, and your accumulation period will have been rewarded. So that's pretty much everything that I wanted to cover today. Sure, there's many more, but we covered many more of them yesterday. That's it for today's video, guys. So wishing you guys the best of luck into tomorrow. As I said, don't be too greedy, don't chase, let the market come to you always. Build a bit of a shopping list. As you see, I went through so many different stocks in today's video, but what I did do is I gave levels that I would be interested in playing if names come down there. And you noticed how many plays we actually looked at. So in the event 1, 2, or 3 of those names don't come down into my levels, do I really care? No, because there's just so many names to play in the market at any given time, right? There's always going to be new narratives. There's always going to be new hot stocks. You guys are not going to miss out on anything. So never have FOMO and never feel like you're chasing the market. That being said, that's everything I had for you guys today. Hopefully you guys enjoyed. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing as well. If you're new here, we're on our way to 10,000 subscribers, guys, right? It seems like so long ago that I started this channel, like 2 years ago. And trust me, man, the first few videos, right, when you have like 0 viewers and 0 subscribers, I enjoy making the videos, and I was just hoping that people would find the channel and enjoy the content, right? That being said, we're now 2 years later, and we're almost at 10K subscribers. It seems unreal because I don't really do any advertising. I also don't have any... I should, but I don't currently have any other social media like Instagram or TikTok with short form content. So even with longer form content, I know a lot of people, maybe some of you guys have seen my video thumbnails before and seen a very long time on the video and said, oh, I don't want to listen to this guy for an hour. So I appreciate all of you guys that actually clicked on the videos, subscribe to the channel, enjoy the longer form content that I pump out. I know, guys, I know how the algorithm works, and I know how people work as well. The perfect video length is usually between 12 and 20 minutes, right? But I just find as though, because when I watch 15, 20-minute videos, on financial topics, because I do look at what other people are doing, right? I feel as if it's not in-depth enough. So the goal of this channel was to provide more in terms of when you look over a chart, instead of just giving, here's support, here's resistance, next chart, which is what a lot of people do, right? It doesn't provide that much value. But if I can put a lot of context behind the charts, context behind the earnings presentations that I give, context behind the trade opportunities and stuff of that nature, well, maybe it helps you guys along your journey of, trying to interpret different narratives, different investing landscapes, different trading landscapes, right? And things of that nature. So thank you so much for subscribing to the channel. It really means a lot. And lastly, if you have any questions, please feel free to ask them in the comment section down below. And last but not least, if you guys wanted to join a trading and investing community of over 250 other members such as yourself, whereby we trade the markets every day, build very solid long-term portfolios, and we also have a lot of fun in the process, you might consider joining our trading and investing community. That being said, in the community, you get access to a few things. Number one, you get access to all of my trades in real time, whether those are the wheel trades, the directional trades, the leap call contract trades. You can see that, the green little check marks are wins, the red little circles are losses. Last week, we closed a few losses here that we've been carrying since the month of June or July, just into this volatile period of September. I mean, one Apple call made up for all these these are super tiny losses, guys, right? So I like to keep my wins big and keep my losses very small. Here's all the trades over the past few months, right? You can kind of see the one kind of outweighs the other. No promises. I can't really guarantee anything, but, our members have been doing fairly well recently and also have been learning a lot. So you get access to all of my swing trades, no matter what they are. And also you get access to all of my long-term portfolio buys as well. I don't talk about that as much, but all of our members, guys, I make a big emphasis in there of building very high quality long-term portfolios, right? Tax advantaged accounts, non-tax advantaged accounts, everything. You get access to all the trades. You also get access to our private morning live streams Monday through Friday. I stream for 2-3 hours in the morning We trade live, and I answer all your guys' questions on your stocks, your options, your long-term portfolios. You get access to our education section as well, whereby I have several educational videos, technical analysis, fundamental analysis, how to grow long-term portfolio accounts, trading accounts as well, trading strategies, the wheel strategy in detail, several of them as a matter of fact, and all the other option strategies that I use, leaps, debit spreads, credit spreads, stuff of that nature is in that section. You can also ask me all your questions in our chat rooms throughout the day. I'm very fast to answer. And last but not least, you get access to all my watch lists. If you guys enjoy my watch lists and or my charts, you get to copy paste all of my charts, all the support resistance areas. If you struggle to draw them and you just want to copy mine, you can do that with a few clicks of a button. And you also get access to obviously all the earnings rundowns that I do on like hundreds of different stocks. So if you are interested in any of that, we would love to have you in the community with us and have a bunch of fun while you learn at the same time. The link to the Discord is down below in the video description. Hopefully I see some of you guys in there soon. And if not, I'll see you guys back on the channel. That's it for me. Have a good day of trading tomorrow. Best of luck. Hoping you guys crush all your trades and your investments. Take care and peace.